Hello, guys. Good morning, good afternoon, good evening from wherever you're watching from. This is Tiger Community, Tiger Trading Community. As well, you can also call me King Precious. This is Tiger Trading Community where I teach people how to trade, analyze the forex market, know the different components in the forex market, and how to execute it and become a profitable trader. With this strategy, I've been able to grow my $10 account to $100, $100 to 1,000 consistently. Though there may be losses, though, yes, but we make sure that the gains are higher than the losses. So it's possible that you can deposit $10 and you grow that $10 to $100. If you're consistent and if you're patient, you grow your $100 to 1,000. So everything is consistency and patience with determination. Everything is consistency and determination. So if you are watching this video and you're not liking my page, you're an enemy of progress. You don't want me to drop more content about forex markets and its components. So like my page, follow my page, and we can help each other. My mentorship fee is not expensive. It's a lifetime mentorship fee. When you join my community, as long as I'm in that community, you you keep getting more information about forex trading. As long as I'm in the community, as long as you are in the community too, you keep getting more information about forex trading. So let's dive in. Let's dive in what order block is all about. So firstly, today I'll be teaching you about order block and breaker block. I'll go into the order block first, which is the major component. The last video I did about fair value gap. So today I'll be talking of order block. So order block in Forex are price levels where institutions, the market makers, take action in the Forex market, either for a buy or for a sell. What the meaning of order? Order simply means either to buy or to sell. Blocks means in large quantity. The market makers, which are the banks, big commercial institutions, billionaires like Elon Musk and Donald Trump, when they take action in the forex market, that's when you dictate an order block due to the large impact they have made in the forex market, either for a buy or for a sell. So order block, like I just made the definition, like I said, when the market makers, the big institutions, take orders in the market, they take orders in the market, they take order blocks in the market because their stakes are really high. The money they use in taking these orders are really high. So it causes a reaction in the forex market. It causes a reaction in the forex market. There are two types of order blocks: the bearish order block and the bullish order block. So I'll be explaining what the bullish order block is first. This on the left hand side is the bullish order block because it went to the bullish direction. The bullish direction is upward. So it went to the bullish direction. And least I forgot to explain the bullish order block. It is the first negative candle before the bullish candle. The first negative candle before the bullish candle is the bullish order block. So where is the first negative candle there? That's the first negative candle, which is the red. The red is the first negative candle before the bullish candle. So explaining that. So that's it. The first negative candle before the bullish candle. So for the bullish order block, the red is the first negative candle before the bullish candle because the stake is making the candle to go upward, is making the candle, the chart, the candlesticks to go upward, is making the market to go upward. I don't know if you understand me, but it's making the market to go upward. So that's what the bullish order block is all about. The last sell candle in the bullish order block, creating the break of structure. It means it comes in aggressive. Yes, this green one is always bigger than the red one, the negative one. The green candle is always bigger than the negative candle. That's the bullish order block. The one that comes after the negative order block is always greater than the negative order block. Sometimes it can be one, it can be two, it can be three, but it's always greater. It's always giving much volume, much height than the other block. The buy candle that comes in is totally bigger than the first one, so it's traded above it. The bullish candle serves as a support candle. So what I'm simply saying is that if you know what an order block is, which is the high stake of funds in the forex market, if the institutions are going for a buy, it causes the forex market to go for a buy. If the institutions are going for a buy, it causes the market to go for a buy. If they are going for a sell, it causes the market to go for a sell. So an example of a bearish order block, which is the selling order block, that's it there, because it changed the direction of the market going down. It changed the direction of the market going down. And these market makers, these institutions, they only sell when the market is high. For instance, if you own a television and the price of television is very high, you will sell it when the price of the television is high. But if the price of the television is low, you don't want to sell it. Rather, you buy, because that's the time to buy, because the price is low. If you're a television distributor, maybe you sell television as a commodity. If the television price is low, you buy in big quantity. This is what the market makers do. When the price of the commodity is low, they will buy it so that it will have value. And when the price of the commodity, so to have value so that they can sell, good. When the price of the commodity has now gone up, they will not be able to sell, so they'll still make their profit. They are the market makers. They're the one that determine the direction of the market because of huge funds and capitals that they have. Because of huge funds and capitals they have staked in the forex market. These are examples like Donald Trump, Bill Gates, Elon Musk, all those rich billionaires, and sometimes banks and institutions. So you look out for these other blocks before you take your market. Remember, I'm just telling you what an order block is. I'm not showing you how to use it to analyze it. I'm not showing how to use it to analyze the forex market or use it to strategize in the forex market. I'm just explaining what the order block is. So after this all said, I'm going to the breaker block to show you what the breaker block is. A breaker block is a failed order block, an order block that is meant to be respected, just like a fair value gap. In my previous video, I talked about fair value gap and how it's been respected. Another block is also another component too, that when you look out for the fair value gap, you look out for the other block. These two components are meant to be respected, but whereby the other block is not respected, it's failed, then it's called the breaker block. The other blocks too, like mitigation block, rejection block, there are many other blocks components too, but these major ones are the only ones I'll be explaining for now. So like I said, you can join my Telegram channel where I'll be dropping more content about all this. So in the breaker block, there's a bearish breaker block and a bullish other breaker block. In my other block definition, I said the first negative candle before the positive candle is the other block, because the positive candle is what determined the effectiveness of the negative candle. You understand? So it is what we use to identify the other block when it comes in, the first negative candle. So just see it as a grammar. Look at, I'm trying to show you the strategy. So when the market refuses to fail at that block, see it there. Then the market refuses to fail at that block there. The market on the other side, the market passed through and went down. This is how the market is meant to be: bounce, double bounce, and go up. But on the other side, the market had to pass through and go down. You see that angle is the breaker block. Went down and later came up to respect it. The market later came up to respect it. It passed through that angle and later came up to respect it. That's what the breaker block is. This is a bearish breaker block. This is a bearish breaker block. So you see, this is a bearish breaker block because it went down. Bearish is down, bullish is up. So this is a bearish breaker block. So, but if the market had gone like this, like this, like this, then go up, then it has respected it, because the market is no longer a breaker block. The market is meant to respect it. But if the market go like this, then it has respected it. See that angle? Let me show you. See where the other block is. See where the other side is. You see the two levels. You see the difference of this chart pattern. This one went down, broke it, and came back to retest it. You see, broke it and came back to retest. If you retest it, you could keep going down, unless there's a change of character, then to now go back to the upward trend. But if there's no change of character, it will keep going down. So, but on the other side, the market, which we detected the other block, it came down, respected it, and go up, because other blocks are meant to be hood stakes that should be respected by the market because of the hood funds or deposits in it. So this bullish other block, see the chart pattern, it respected it and came down. See the bullish other bearish, the bullish other block I'm explaining. So this respected it and came down. This respected and came down. You see it. I'm giving you an example of a bullish breaker block. Sorry, this is a bullish breaker block. This respected it and it came down. So now it has gone upward. It has failed to respect the other block. It has failed to respect the other block. You can see it has failed to respect the other block. So this is a bullish breaker block. So that's the bullish breaker block. That's it. That's how it works. So this theory that I'm giving to you, this one's actually free of charge. You can always come into my live channel where you can ask me questions. As long as you're in that channel, you can ask me questions. I am open to answer you. As long as you're in that channel, I am open to answer you. Ask me questions. Pay for your mentorship, which is $30 or $50. Ask me questions. I will explain everything better for you. Do not shy away from mentorship money. It's very important. Thank you.